All right, let's see if that works. Trying again. Yeah, we've been taking more guidance from the membership of the network and trying to see which topics really are salient right now. And it seemed that the issue of investing in sustainable agriculture and what that would look like if it were to be truly transformative was one that was at the forefront for a lot of people. And in this context, I would like to say, please look out. We will be sending to the members a fairly detailed questionnaire soon to get more of a sense of topics of interest and sectors or other areas of exploration that you would like us to bring up within the context of the webinars. Please get back to us on that so that we can serve your needs as closely as possible. And the second thing about this webinar around sustainable agriculture, as many of you might already be aware, we've been doing a fair bit of work on standards for impact investing. So moving to a 2.0, so to speak, away from just saying, oh, we're creating X number of jobs, protecting X acres of rainforests, or we are developing however many megawatts of clean energy, but a little bit more at what those impacts for the communities look like, what the standards are that come out of the practitioners on the ground themselves within the specific sectors to which Transform Finance has access, and translating those into implementable tools for investors, both at the foundation, MRI, PRI maker level, but also for the fund managers themselves to say, hey, as you look at a potential portfolio of investments, these are the factors that have emerged from the practitioners in the field as being the most important ones to really get to deep impact. And with that, I introduce to you and I welcome Jenna Stoney. She's the executive director of the Swift Foundation. They've been tremendous supporters of our work. And Jen will tell us a little bit about their experience with investing in agriculture, both the successes and some of the challenges that they've encountered, as a way of framing this conversation. And then we'll turn over to Grupo Paisano to tell us about their project. Thanks for joining us, Jen.
Great, thanks. You can hear me okay?
Perfect.
All right, great. Well, thanks so much. Just really briefly, by way of introduction, Swift Foundation is funding in what we call the agroecology and land stewards for quite a while now. We've had a pretty robust portfolio for the past 4 to 5 years of about $1 million in grants a year. But in addition to that, we have a set aside impact investing portfolio, and part of that is focused on sustainable agriculture, as the founders of Swift are grassland beef ranchers. So there's a real commitment to sustainable and agroecological production techniques. But alongside that, we're very interested in the social justice aspects of agriculture. So it's not just agroecological techniques, but how is the community actually benefiting or changing the dynamics of agriculture? So just briefly, we have funded directly companies such as Guayaquil Yerba Mate. For a long, long time, the family's had a connection with them. But more recently, we've been funding the RSF Sustainable Agriculture Fund and Root Capital. And I think with both of those funds, what's very interesting about them is that they both use philanthropic dollars alongside of their micro grants and loans, as well as loan guarantee dollars, in order to ensure that these new entrepreneurs who have very little access to capital or have very few assets to raise capital against can actually enter into these markets. What's interesting is RSF was saying that their average size of deal is about 150,000. These are mostly in the United States. And I think they have about 34 loans going on, primarily around food hubs. And they talk about large infrastructure purchases such as refrigerated trucks, warehousing space, that kind of thing. I'd like to highlight that we're also part of the Slow Money Network, and they recently did a State of the Sector report on investing in small food enterprises. And the interesting thing that I saw is they showed a big gap between the smaller investments and the larger ones. In other words, 60% of the deals in terms of numbers were less than 100,000, and yet 60% of the dollars were invested in deals greater than $1 million. And what Swift has really found in looking at direct investment, which is something that we're very interested in getting engaged with, is that it's hard to find transformative deals in U.S. agriculture. Mostly we see transitional deals, opportunities that are focused on transitioning land to organic, but not necessarily transitioning it to farmer ownership. So it's clear to me, you know, through RSF and Root Capital, which has been working in this field for a long time, that there's a lot of philanthropic dollars that need to go alongside of these new investments. We need technical assistance to get the field ready. We're going to need loan guarantees. As Andrea said, this idea of standards, are trying to figure out, you know, how can we ensure that investments are truly transformational and not simply transitional in nature is an interesting question. And just a final point here is I think there's a tremendous opportunity here for growth, in that most of my colleagues that fund agroecology on the philanthropic side are not doing any funding on the investment side in their endowments. Their endowments are traditionally invested. And so I think, you know, that is something that Swift is hoping to promote. And I do see a lot more of these foundations looking at how to use their endowments in more creative ways to stimulate sustainable agriculture and agroecology. And so I'm hoping that this will be a migration from not just philanthropic dollars, but also investment dollars. So I'll stop there, and I really look forward to hearing our presenters today. Thanks so much.
You're muted.
Yeah,
Andrea, we cannot hear you.
I'm done.
Well, you guys already know what I say, so all you need is just to see my face moving, and you can imagine it. Now, saying thank you very much, Jen, for helping us frame a issue in this way, and hearing more from the LP perspective, what you might be looking for in some of the investments, and what kind of issues. And we'll turn it over to Laura Ortiz and Hector Martinez of Grupo Paisano to describe to us their project for a fund for Mexican agriculture with a community exit that we're very excited about. So thank you, Laura and Hector, for joining us today.
Thank you for inviting us.
Yes, it is an honor for me to be collaborating with Grupo Paisano. I did not create this model, but I am collaborating with them since 2014. And this amazing team of people that are truly generous and that have taken the time to deliver this amazing model that truly captures everything Jennifer Astone just pointed out. The transformative part, the community ownership at the end, and the long-term impact that we really want to have in the environment and for the rural communities. This is what really Grupo Paisano is all about. So I'm honored to be able to present this to you. Hopefully you bear with me through the explanation. And if there's something that is not clear enough, we'll love to get into more detail. Hector will help me explaining the financial model specifics and the exit strategy. And I will try to explain a little bit of the whole model so that you can get a sense of how transformative and how holistic the model is. So just to start off, let me see. Do I have the control of the slides? Oh yeah, okay. Okay, so the challenges in rural Mexico, of course, you know the rural challenges in general, the global challenges, but the specifics in Mexico is that we've got 5.4 million farmers who are small producers. In this case, we measure small producers. We only count farmers that have less than 10 hectares of land. And these farmers, if you count that in average, they have like 5 or 6 family members, then you're talking about over 20 million people in Mexico. But 5.4 are like the head of the family or the owners of the land. They live on less than $3 per day. These are the most recent statistics we have, around 2013, those statistics. That's the average of their income. And what we see, the problems that we see in Mexico today is that the land is being abandoned by the young people. They usually look for opportunities elsewhere in Mexico or even migrating to other countries, as you know. So the land is becoming less productive. And of course, we are becoming increasingly dependent on imports. So Mexico's total produce consumption today is 45% imported. So this is a problematic that is very complex. So these small producing farmers are the most vulnerable, and they suffer complex poverty conditions. They lack health, they lack education, of course, they lack the access to capital. All the pictures you see here, they're not professional pictures. I just want to point that out. Because we just went to visit these communities during the last 2 weeks, and we took the pictures ourselves with our cell phones. So you're going to see the real Grupo Paisano communities throughout the presentation. So the solution to this problematic, as complex as it is, should be daring in that we do have to take some risks because we're dealing with agriculture and it's a very large population. It has to be honest. We do need some transparent mechanisms to ensure the success of the model. It has to be human because we cannot force progress into people. We need to take into account all the human aspects, and it has to be scalable because in order for it to be profitable, we have to invest in so much capacity building, and we have so many issues to take care of that if we don't do it at scale, at sufficient scale, there's no way to make it profitable. So as you can see in the slide, it must achieve economic, environmental sustainability, solidarity, and of course generate at the end social conscience for these communities as well. So Grupo Paisano is composed of 4 companies that are for profit and 1 non-profit. It is a holistic model. As Jen pointed out, we do need some philanthropy. So Corazón Paisano, the one at the beginning, Corazón Paisano, which means heart, takes care. I'm gonna hang on with me, and I'm going to deliver the specifics in the next slides. But I just want you to see that it's a holding company composed of several others. So on Corazón Paisano, basically, this nonprofit organization, they contribute to the integral development of the community. So they are the ones who start the projects. They go to the communities, they diagnose their basic needs, they see their level of nutrition, education, and health, and they are acting as links of many other government institutions and other nonprofit organizations that help fulfill these needs. For example, Un Kilo de Ayuda, which is 1 kilogram of food supply per family per day, that's one of the organizations. So they just help fulfill the basic needs of the communities, and they're the ones who come first. Then after, their main goal is to stabilize the community. Then, am I going too fast? Am I going okay? Chats? Okay. Anyway, so Impulsive Paisano is the first for-profit company. Impulsive Paisano really provides the technical assistance. So when Grupo Paisano comes into a community, most of these communities are already producing. So, okay, so Impulso Paisano has to deliver some technical assistance for them to incorporate sustainable techniques, sustainable farming. Some of them will go into certified organic, some of them might go into transition, but they need all these technical skills, all the development, all the knowledge to become sustainable. So Impulso Paisano sets up the projects, the product projects, and make sure that they've got the skills and all the execution of the project. They make the entities, the legal entities, and everything. After Impulso Paisano sets up the projects, then we've got La Mat Mexico. La Mat Mexico works with our human capital. So they are responsible and specialized in the transformation of communities. They form the local leadership. So they are, let's say, the empowerment switch, La Mat Mexico. So La Mat Mexico is formed by transformative individuals. They're amazing individuals. They're life coaches, and they help each person bring out the responsibility of themselves, of their families, of their companies and of their country. So in the Maslow pyramid of needs that you saw before, bringing these farmers from being at the bottom and not fulfilling their basic needs up until self-actualization, which means fulfillment, working towards a common goal. And so that's the work of La Mat Mexico. They really come in to ensure the success of the model through stabilizing all the human capital and empowering the local leaders. Then we've got Productos Paisano, which is the company that really helps in logistics, sales and distribution of the final goods. So as you can see in the slide, here you see the story. The Mexican story starts with the small producer at the beginning. They sell for approximately 1/16 of the total value of the final product. So they only get paid, they get paid the least in the whole value chain. Then the intermediaries come in. In Mexico, we have some type of intermediaries called coyotes, and their job is basically to go around the land and search for the people who don't have their own transportation means to get their crops to the market. They go, they pay whatever price they want to pay, and they take the crops usually at the lowest price possible. So this, of course, takes a lot of the margin away from the small producer. So what Productos Paisano is trying to do is to eliminate those intermediaries in favor of the small producer and really make the farmer take advantage of more margin. So it captures more margin and it provides all the logistics, the exporting and distribution, and the local sales. And Productos Paisano needs to be large in scale to make this difference, because we are investing in a lot of industrial development so that the leftovers from each hectare can be processed, for example, into juices, into marmalades, into powder. And that way, right now in Mexico, all these small producers, they lose around 40% of their crops as leftover. And if they don't have the plants to process those leftovers, they only have 60% of their crops. So now with Productos Paisano, they will be able to move the fresh produce and the processed goods. And finally, we've got Inverpaisa. So how do we finance all of this? Inverpaisa is the financial branch of the projects, and Inverpaisa can set up different financial vehicles to fund this. The team in Grupo Paisano really had the idea of aligning the interests of the investors and the producers. So when they were choosing between debt and equity, they decided to choose equity because they believe it is a more balanced, or let's just say a fair allocation of risks and rewards with the producers. That is very different from debt. So they chose an equity model as their first model. This is a picture taken last week. And then you've got the specifics of the fund. So the first fund that we're raising right now, it's Inverpaisa Uno. It is an equity fund. The target, it was $100 million. Right now, it adjusted to $85 million because it is in Mexican pesos. And in Mexican pesos, it stays the same. The thing is, in the last, let's say, couple of months, the Mexican peso has devaluated over 15%. So right now we don't need the $100 million, we only need the 85 because of the currency fluctuation. The minimum ticket size is $3 million because that is the productive unit size that they have modeled into the fund, and it has a duration of 10 years, but it does have possibilities of exit within year 5. Okay. Then we've got the portfolio of the communities. As you can see, there's 4 projects that have already started. So this is a very different fund. The usual equity fund is a blind pool of capital that will usually be allocated at a later date. And this fund, the thing that is quite different is that the seed capital has already been allocated to start these projects. to choose them, evaluate them, and start them. So these 4 projects are already in place right now, and 2 of them are producing and profitable right now. Michoacan, as you can see, the third one is a flagship project. It's the biggest one, and it's very diversified. It is selling over 14 different crops. And I have to say, Michoacan is one of the most fertile states in Mexico. Veracruz too. I mean, all of them, but but these are the most fertile states you can think. And all of these communities and projects, they all share the industrial infrastructure, and they're trading under the same company, which is Productos Paisano, for it to be easier to export and to consolidate the tons of the products so that you can send a bigger amount. Okay, and these projects, as you can see, this is the impact of each project. So you can see they vary in size, but the total aggregate impact, you're impacting over 2,450 small producing farmers and their families at the end of the whole Inverpaisa One model. They should be creating around 422 highly specialized jobs, 5,300 indirect jobs. So over there, you can see the breakdown of each one, how much dollar value would be allocated into each one, and basically, I mean, those are the projects that are already in place. And if that was too much information, which I'm hoping it wasn't, this is the more basic rundown of the model that you can see. So imagine you are in Veracruz. Imagine this is the Veracruz project, and I'm going to explain it from the beginning so that you can see how all this operates. So the first one to come in is is Corazón Paisano, that you can see there in the red arrow. So Corazón Paisano goes there with the producers and the communities and sees how they can fulfill their basic needs. After Corazón Paisano, then Impulso Paisano goes and helps form the entities, which are, you can see that it says SPR. SPR, it's the Mexican way of saying the legal entity that associates the small producers. So they set up these entities, and after setting them up, they are divided into 2. One is the agricultural integrator. They provide everything you need to harvest. So the plague control, the natural plague control, of course, everything is organic. There is the fertilizers, there's the tractors. So the agricultural integrator provides everything you need as a farmer to have your crops. Then the industrial integrator, which is the one that processes the goods. It could be either packaging the fresh fruits and vegetables, or it could be the storage, the warehouse, the processing plants to make the leftovers into juices and powders and all the rest. So I hope this is a little bit clearer. Then you see La Mat Mexico coming in. They work directly with the communities and the producers, so they intervene directly with the people, and they provide their services for a fee. And at the end, all of the fresh and processed products are sold by Productos Paisano. But the invoice is made by the companies. The industrial integrator, which is owned by the producers, is the one that invoices the products. Productos Paisano only provides the service of logistics, exporting, distribution. And all of these, how is all this financed? Of course, by Inverpaisa. So as you can see, the green arrows are the investments coming in from Inverpaisa, and the dividends out of the companies coming out back to Inverpaisa to pay back the LPs. So this is my last slide. I'm gonna ask Hector to join me. This is just to explain, at the beginning of the projects, all these producing companies are owned 90% by the fund and 10% by the group of producers. So they become shareholders from the beginning. They do have stock from the beginning. And as time goes by, their shares they buy more shares, so their shares become more and more and more and more. And Inverpaisa has become decreases, and at the end, Inverpaisa exits completely, so leaving everything 100% of stock ownership to the producers at the end of 10 years. So this is the actual, the core of the model. So
Laura,
developing, yes.
You froze up on the last part, at least on my screen. I don't know, it could have been on my end, or maybe just in case everybody lost it, would you mind repeating the part about how the 10% grows out?
Oh, yes.
I don't know if everybody else caught it.
Okay, so Inverpaisa starts owning 90. The group of producers starts with 10% of the ownership, but in time, with the dividends that they will be collecting, they will be buying back the shares of the fund, so that suppose we are in year 3. So in year 3, you already see the producers owning maybe 20% and Inverpaisa owning only 80%. So each time it increases the stake of the producers and it decreases the stake of Inverpaisa. And Hector will do a detailed breakdown of these exit strategies.
Okay, thank you, guys.
Oh, thank you. And Hector,
Andrea,
let's take a second just to see if anybody has questions at this moment on what was presented so far.
I'm sorry, it's
and
a lot
people
of
should be able to raise their hand, or let me unmute you all and see if you would like to do something, or I will put you on mute. Any questions so far? All right, I will put back on mute, and feel free to unmute yourselves if you want to chime in at some point.
Hi, is it? Can I still ask a question?
Yeah. Was that Sean?
Yes, it is. It's a wonderful presentation. And can you just clarify, how long have you been operating, or how long has this operation been generating revenue?
Okay, the dream started about 3 years ago, when we started figuring out how to help these small farmers to become better farmers and increase their income. But we finally gave birth to Grupo Paisano and the entire economic and social model on 2013, by the end of 2013. Since then, we have been quite busy selecting the first 4 projects, and finally we were able to put the seed capital once we have all the legal companies formed, and all the initial capacitation and training of the farmers on what they will be living. We finally got that together by the end of last year. So we were able to put the seed capital into these new projects by the end of last year, beginning of this year. So to answer your question, we were born last year at the end of 2013. And we are finally working now with 4 communities, with 4 different projects, but we have not done the first loop of return yet. This will happen by the end of this fiscal year, meaning we will get the first results proved. The model will finally be able to get proved by probably March next year, which is when we will be reporting the first dividends out of these 4 projects.
I also see one question from David. You're asking how do Grupo Paisano picks their communities?
Okay, let Andrea, how are we doing on time?
You're doing okay so far. Yeah, you have probably another 40 minutes.
Let me go back a little bit and talk to you a little bit on how this thing was born. we chose 10 acres of or less size farmers, because these guys are the most vulnerable farmers or the most vulnerable productive units in Mexico. Less than 10 hectares is not large enough production size to be able to sell, not even in a small market on their own communities. It's small enough for them to be vulnerable and to be absolutely depending on these coyotes, which means these intermediaries that go out in the fields and pay whatever they want to. Uh, so we needed to group large sizes of small producers to be able to create enough scale to be able to go out and sell to national or international markets. So um, based on this, we knew we had to come up with enough money to be able to group at least uh, 30 to 50 small producers to generate scale and to make the other investments, which means industrial investments, profitable and scalable. So that's why we chose small producers, and that is why we need a large amount of small producers to be able to group them, to be able to put them together, to join them, to associate them, and to put them all these products and all these produce to work together to be able to get and to reach these international and national markets. Second thing, uh, how does the entire group of companies from Grupo Paisano come together? The first thing is the money. We needed to come up with a financial instrument or vehicle to be able to build this kind of scale. Then we knew we needed these small producers, which most of them and a lot of them don't even know how to write or read. We knew we needed to train them and to walk with them through the entire investment process and the entire investment period. So what we did is conform Impulso Paisano, which is our incubation and training company. So what this means is that the money doesn't come alone. It comes with training. It comes with a companionship. It comes with administrative and technical skills to be able to control these large companies and these large investments from day one. Then we knew there was no point in building these companies and putting a lot of money into them and building and putting a lot of skilled people into them if we didn't have the markets to actually put the product overseas or in the national markets. That's why we gave birth to Productos Paisano. Now, Productos Paisano doesn't buy and resell the product with a profit because we didn't want to push out an intermediary to become another. What Productos Paisano does is go out and sell the product for the companies that are owned by the fund and by the actual producers. So we act as some sort of as a commission-based company in which we just push the product throughout a network of offices and do it for the producers. And so this is why all these companies are in place. Now, we had to balance our initial portfolio with companies that needed some time to grow and with some projects that were already there to be invested with. So, and the product is already there, inventories are there. So the product, the portfolio is really incredibly balanced and it makes a profit starting year one. And for and to for last, uh, we needed and we knew we needed to give the producer property of these companies. So even though we invest a lot of money into them, they will get the chance to buy out every single share meaning once the investment term is done, they will have entire property of these companies and all the infrastructure for them to be able to keep on being successful at what they do. So the exit strategy from year 1 to 5 is since we are investing in equity on these new companies that we are forming with the producers as partners, as stockholders, uh, we start with owning 90%, even though we put 100% of the money to build them. We needed to give some ownership to the stockholder, to the producers in the stock, for them to be able to make some money out of dividends and to be able to start repaying or buying out the fund. So from year 1 to 5, what's going to happen is that the producers, out of their own equity cash, they will get, they will have the chance to start buying small chunks of equity out of the fund, and they will be growing with each year their position and equity. Now, on the fund side, since the fund is going to be owning 90% of the equity of these companies from year one, year zero, and year one, what will happen is that they will own from year 1 to 5 a large proportion of equity out of these companies, and the dividends themselves are enough to be able to repay or
Amortize.
amortize, Andrea, amortizar,
Yeah.
Okay.
amortize the initial investment,
The principal.
the principal. So what will happen then is from each year that goes by, the producers own a little more proportion of the equity, meaning and meanwhile the fund is amortizing or getting back the principal and paying off the preferred interest. Once the producers, with each year that they buy out small proportions or large proportions of the equity, once the producers get enough equity to buy out a fixed amount of shares out of the fund, then they will have enough cash out of their own dividends because they own more shares to be able to get some cash out of it, to be able to get a premium in cash each year to for use on their own families or on their own personal economy. A third of that is they have agreed to invest in their own community, meaning community projects. This
Infrastructure.
this could be a better school. This could be a new street. This could be computers. This could be a water treatment facility for their own municipio or
County.
county. This could mean an environmental project or getting light. Oh, okay. That was me. Or getting clean energy for their street lighting, whatever. And a third can be used or will still be used to buy out what's left of the shares of the fund. So that's how these producers get full ownership of the companies, pay back every single uh, um, um, the principal and the preferred interest, and there's enough cash to be free that's freed to be able to get a better living even from year 5. So they don't have to wait till the 10th year to be able to get better living. It starts really fast, and it starts really fast because we can capture around 6 times what they are selling their products from right now. So it's a really large amount of money that's captured on the value chain uh, by uh, eliminating the commercial intermediaries on the chain.
Can you hear us okay? Because we hear some echo.
Yes, I can hear you well, and I assume others are hearing well. If not, please say it in the chat, and we'll see how we can change it. Um, let me let me ask you one thing while I have you here, while I see if anybody else sent in the chat. Oh, and it seems like I might be causing the echo, so I will put myself on on mute in a second. Um, this redemption of using one third of the proceeds, is it a mandatory redemption or is it at their option? And similar on the LP side, is it mandatory to sell upon a call of the community?
Yes. We don't want to, for the fund or any investor, not even us as general partners, we don't want to be there forever. What we want to do is empower these people, put a lot of money into them, train them, and make them and transform them into businessmen and successful communities. So it will be mandatory for the fund to sell shares on a controlled way, meaning we don't want to be out in less than 5 years, and we don't want to be there for more than 10. So between year 5 and 10, we will be exiting, the fund will be exiting, and they will be sole owners of these new companies. Uh,
We have a question from David. Do we co-invest or do we take 100%?
We take, even if the fund invests 100% of the money needed to build these companies and make this happen, the fund will give away or grant 10% to the group of producers of farmers. Meaning, because if we didn't do that, simply there is no equity from the farmers to get dividends out of it and to be able to start paying or buying shares.
Was, did that answer the question?
Did that answer the question, Andrea?
Sorry if you get the echo again as I unmute myself. Yes, it did. It did answer the question, but I think the answer on the question was that you are the farmer only investing in these entities. There will not be
what?
other direct investors.
Somebody else is unmuted.
No, Andrea, your sound is awful. I'm sorry. But okay, so here David clarified the question. He meant by co-invest is a third party coming in and co-funding the project with you. Yes, we are raising LPs as we speak.
We have put, as general partners of this fund, we are committed to put 5% of the total fund size, and we are raising from other LPs the money to be able to make this dream true. But
now, let me read the question. I'm sorry, Hector, and I don't know if it was the original question that was being asked. The companies that the fund invests in, the fund will be the only investor in those companies, correct?
Yes.
Okay.
And just to clarify some of the other questions that I've been getting through the chat, right now we are in the process of raising LPs. The only capital that has been deployed so far is the seed capital provided by Grupo Paisano's investors. It's a team of
six partners.
Yeah, sorry. And also I wanted to clarify right now, the first funds are doing, Mexican impact funds are doing the due diligence process. They couldn't be with us today. They wanted to, but they're getting ready for the Latin American Investing Forum. And but one of them, it is Promotora Social Mexico, and these photos that you're seeing here, they've got some of those due diligence funds were with us in the community. So yes, we are already in the process. We haven't closed yet. And just to finish off the slides from the presentation and then finish with other questions. This is just a summary, the social business model, a summary of how the impact and the benefits are received. So as you can see at the end, we end up with empowered farmers, empowered communities, and with holistic benefits to the entire community.
And for those of you, that are extremely vigilant of environmental impact, two of the projects are full organic produce. The other two are hopefully we will be able to convert most of their products to organic uh, within the 10 years of investment. If not, we will be a lot of environmental impact efforts are being deployed uh, for the land and the water to be preserved and restored. Uh, all of the industrial plants that have been thought to be deployed within these four projects are going to be powered by clean energies, taking advantage of the large warehouses that are going to be built and the areas where these projects are deployed. We have a lot of sun, so a lot of sun energy will be deployed for these projects.
Yes, and this slide, it was a special request from Andrea, the traceability of value creation. So as we deploy the capital, you can see in this slide that the capital flow comes from the LPs to the fund, which is Inverpaisa. Then let me see if I can point this out. Can you see? Okay, no. Anyway, then from Inverpaisa, it flows into the two companies, the agro integrator and the industrial integrator. Those companies are owned by the producers, the producers, which are the producers and the fund, and those producer associations come down into Alejandro, Ramon, Eva, Pitas, and all the rest of the farmers. So over in this slide, you can see the traceability of each dollar value created for them and how it comes down to them. Let me see. I think this is it. This is our contact information and one of the pictures of the biggest project, Michoacán. They received us very warmly 2 weeks ago with all the other funds that are doing due diligence. They brought us the most magnificent food and music. And any questions?
Well, I will take moderator advantage and go back to this traceability of value creation.
Yes.
There are two things that I was looking at there. One is, who ultimately benefits from this, and I think that there is you made a good case for the inclusion of the coyotes and the way in which by having this bigger size and the interaction with Productos Paisanos, you can get the products to market at the right price, etc. From this slide, if I understand it correctly, so the LP's money that comes into Inverpaisa flows through two main companies, the agro integrator, the industrial integrator. From those, it goes to producers. Those producers eventually will become 100% owners, just 10% owners, correct, out of their dividends. And those producers themselves are owned by the farmers. So ultimately, this ownership goes all the way down to the farmers. That's not this intermediate industrial scale level, correct?
That is correct.
Okay.
The farmers, as physical as individuals, get together into small producing companies. These companies are the partners of these integrators or of these two large companies in which the fund is partnered. So we can trace down the ownership of the investment down to any individual we want.
Yeah.
And And the governance of those entities. I mean, I imagine this would be a pretty distributed ownership of things. What is the governance plan around that?
As long as the fund has an interest there, we will have governance control, but it's only on the administrative and the technical issues of it. We have no wording or saying on how the dividends are distributed. These things are legally established from day one. So it means we will need time to train locals to be able to run these companies and govern them and run them technically. That's why we want to stay there for at least 5 years and not longer than 10, because we need time to train these guys. So we will deploy all the human talent needed to properly and efficiently run these companies from year 1 to 5. From year 6, what will happen is that we will have had chance to train these guys, or some of them, to be able to occupy some technical or management positions, and then we start the switch between our guys, two guys out of the communities, family members of these producers, sons, grandsons, or even some of these farmers taking these positions. So by the time we leave, or the fund leaves, full ownership and governance will be in charge of the producers or the communities.
Also, we've got one question from Jennifer. Are philanthropic partners for funding Corazon Paisano and the other entities, and if we are raising capital for that as well?
Okay. We Corazon Paisano, our foundation, will need some money because they have to remember, we need to train these guys to be able to get these positions, technical and admin and governance. Corazon Paisano is in charge of getting the scholarships or getting these people into school. So we will need some philanthropic foundations or persons to raise money for us to be able to put these guys into school. Uh, yes. Does this answer your questions, Jennifer?
Jen? Everyone is in mute, right?
I just unmuted Jennifer in case she wanted to elaborate on that.
Okay. Any current partners?
We are talking. We do have. There is a national association of higher education institutions in Mexico. This association basically groups all the private and most of the public university and higher education schools, or institutions in Mexico. We have teamed up with them, and we do get a lot of support on the scholarships and education wise out of them. They are completely on board with what we're trying to do, and they will help us as much as we can. But most of these private universities and public universities are not on these small rural communities. So even if we get the scholarship for them to get free education, we still need to get them to the small cities or to the large cities on which these universities are established, and we need to provide these guys with tuition or housing and food. So we still need to get some cash for each and every member of these communities that are being educated.
There's a very special Mexican NGO that is also involved in one of these projects, which is Alternare, and they are an NGO for quite some time, I believe.
17 years.
17 years they've been operating, and they do get philanthropic support from several foundations, private corporations, and private investors. they are kind of the one of the most important partners. Also, I am helping link Corazon Paisano to other private philanthropists in Mexico and some bank institutions who are still in the process, so we cannot disclose them yet.
You're welcome, Jen.
You're welcome, Jennifer. So, Andrea, is there a chance to show the video so they can see the testimonials?
I don't know how it would work to show the video within Fuse. To be honest, that might be a bit my technical shortcoming here. And let's see meanwhile if there are any other questions. There's one that I would like to ask more on the technical side, if you don't mind. Meanwhile, towards the beginning, you were saying choosing equity over debt or quasi debt as a way that that is less extractive or leads to a more fair allocation. It seems to me as a general trend, people that are being thoughtful about value creation in communities and the allocation of risks and generally tend to go with debt or with convertibles, and move away a little bit from the straight equity model. Can you elaborate a little bit on that idea of equity as being less extractive than good debt, let's say?
Yeah, what we when we designed the business model, we found that there's a whole bunch of money going down to these communities and to these farmers uh, in the form of government support with no payback need, and a lot of micro loans and larger loans to these farmers. Uh, Remember, these farmers are 10 hectares or less, so they don't have any kind of access to any formal kind of credit from um, actual banks or credited institutions. So they do have access to government loans and stuff like that. But what we found is that the more money that goes down in the form of loans and non payback money, the poorer these guys were. Uh, to give you an example, for the past 10 years, somewhere around $40 billion have gone down to farming in Mexico each year. One thing that happens is that the beneficiaries of this money mostly are 10 hectares or more people, farmers. So we're leaving these guys behind incredibly. So we knew we needed to align the money owners to the interest with the farmers' interest, and we found that equity is the best way to do so, because the money owners want to make a profit, and they want to make money, and the farmers, they really need to make money because they're dying on starvation and misery. So they both want to make money, and what better way to align interest and risk uh, uh, than putting equity together, building companies together, and giving the money owner an exit way, a comprehensive exit way, and the farmer a way to actually become owner of these new investments.
Did that answer the question?
I mean, I don't want to get overly technical unless it's of interest to the other participants. I think that in many contexts, if done properly, a debt.
Oh, you
Whoa,
froze.
you froze.
Andrea? Can you hear us? Can anyone hear us? Is anyone there?
And I can pick up where Andrea left. This is Leonardo Letelier from Sitawi. So we
Hola,
do
Leonardo.
that. Hola, Laura, ¿cómo estás? So we do that. I understand the alignment of interest in equity, but it's not always 100%, neither on debt nor on equity. There are advantages to both. The clear advantage to debt would be that from day one, the farmers own 100% of the company. So rather than buying it back over time, they own 100%. You can have the same advantages and disadvantages depending on how you structure the deal, but I don't see any natural preference. One thing that I would mention, though, that maybe it's just a conceptual problem with mine, which is we're not reducing intermediaries. Well, because we still intermediate. What we're doing is, yes, because they plant somebody, the new company does the processing, and the other company, the industrial company, or the commercial one does the commercialization. The real difference is that we don't over extract value on the intermediation side, because not that intermediation doesn't add value, it does add value. The thing is that we're just being fair around how that value is split between one side and the other. Because if we keep saying that intermediaries are bad people, at some point in time, the table is going to turn.
Yeah.
Right?
No, you're right. They're not bad people. What we're saying is that in Mexico, usually there's some abuse in the margin of the and disproportion between the margin of the coyote and the margin of the small producer.
But you're completely right. Uh, right now, the coyote is a necessary bad, because otherwise, if the coyote didn't exist, the farmer wouldn't even have that way to put their products into a market. So yes, you are right. We are not eliminating intermediaries. What we're doing is we're creating the intermediation vehicles and companies, and we're giving property to the producers that actually put the grow the apples and the crops and the fruits and the vegetables. So what we're doing is we're putting some of the links of the chain of the value chain in the hands of the actual producer.
Is that Leonardo? Can you hear us? Hello?
Yeah, I think everybody heard the answer. Yeah.
Okay. I don't see any more questions, but maybe we can go deeper.
Would you like to see a video? We can put it on the screen here, Andrea. So
I don't know if you can see it. No, is it too reflective?
Yeah.
Don't worry.
Yeah, I don't.
So the video was just to see the testimonials from the farmers. We can send it along in a link. The point of the video is that we really wanted to make sure that the farmers understood how the model works, why they are partners, and what they will get at the end. And I was glad to see that they did understand it. And with their own simple words, they see through it, and they say that they really wanted this to happen. So the big difference between many projects and Grupo Paisano is that in Grupo Paisano group, they didn't choose the communities asked them for their intervention. So Hector actually toured around the country with Zagarpa, which is a government agricultural institution in Mexico, and show them that there was a model that they could work together to own the exporting companies, and a lot of things that were linked to sustainable agriculture. And the association of small producers that wanted to have that intervention in their communities, they kind of applied to get it. So after, because there was a question by David on how we chose, how Grupo Paisano chooses their communities. So after several organizations or associations of farmers came and asked for this intervention, then Grupo Paisano saw if there was not any political interest in any of these groups, and only chose to work with the groups that were neutral. So after choosing those communities that were more neutral in the political sense, and that had longer term links of the association of producers, so people who were working together for longer time, that's how they choose the communities. So it was a very, I guess, an integral approach to saying, instead of going I mean, top down, going bottom up with these solutions and interventions, so that the attitudes of these producers can be more accepting and more optimistic, because they were the ones who asked for Grupo Paisano's help. So that's what you are going to be able to see in the video through the link that we will send. And I don't know if you want to say something
No,
else.
yeah. We go through for each project that we choose, we go through a very extensive process on identifying clear leadership without any political or religious agenda. We go there and pay a lot of visits to the community, meet all the producers, meet all the farmers, go out and go to the fields. Uh, Politically neutral.
We have a question.
Without,
what does it mean to be politically neutral?
no, it's just without a political agenda. That's basically it. We don't want a social leader all of a sudden taking advantage of joining and putting together 500 farmers, and all of a sudden 2 years later, this guy wants to become
The party of whatever.
yeah, wants to become the party leader, or
It's a usual thing in
county
Mexico.
county mayor.
Yeah,
Yeah.
it's a common way of doing things in Mexico. But neutral in terms of party politics, yes, we mean that. Yes, in Mexico, it's very tough to talk about politics. We're just trying to avoid the political agenda in general.
Rodrigo says, "Yeah, I know. I'm Mexican."
Okay. I don't know if there are any more questions.
I'm happy to defer to others without hogging the mic, but I do have a question if nobody else is popping up. Oh, thank you. Question regarding risk concentration in this project. So essentially, this is $85 million going into 2 aggregators or integrators, as you call them. And the risk seems to be resting initially more on the LP side, and then eventually will be a risk the rest more on the farmer side, right? Let's say if the producers of the producers of Michoacan, let's say, would suffer from something that happens in Veracruz, which distribution of risk or a diversification across geographies in Mexico, but we're still dealing with value that is concentrated in just 2 entities that sum up to $85 million, essentially.
It's not 2 entities; it's 2 entities per project. So we were watching and looking at this concentration of risk. So we decided that per each project, per each region, we will be creating these 2 companies per project. So the fund or the LPs will be investing for now into 8 companies, 2 companies per project. Since we have 4 projects, that adds up to 8 companies.
Hold on, sorry, 1 second. I thought there was one agro integrator for all the projects and one industrial integrator for all.
It's one per project.
One for each. Okay,
it's one. That reduces the risk tremendously.
Of concentration.
Yeah. Mm-hmm. Thank you. And one more
One
in that case.
sector, 4 regions, 8 entities, 4 products.
X products.
Uh-huh.
Right.
Yeah, the biggest array of products is in Michoacán. It's over 14 different crops. So when it's not season for lemon, it's the papaya season. When it's not papaya season, it's mango. They've got, they are so fertile. There's a saying in the town that you throw away a cigarette, the piece of a cigarette, and a crop comes out. And a real thing that actually occurred, we were in the Veracruz project, and the sticks used to make the fences. So a wooden stick used to make the fence. It had some blossoms sprouting out of the stick. And like the roof that you've got over your head, it's made of logs, and those logs have sprouts. So it's like it's such a fertile soil and such a wonderful land that it is highly productive. We are seeing some of the crops will be harvesting 5 times a year. This is amazing productivity. And I mean, with a very organic fertilizer, there's 2 types of fertilizers that have been used right now, and it's an amazing process of how they do it. One is with worms, and the other is with feces. But it's very interesting.
Yeah, it's amazing what we can do. But Leonardo, yes, one sector which is agriculture, agro industry, for regions for now, since this is our first fund and our first effort, 8 entities. You're correct, and this will add up to somewhere around 22 to 26 different products within 2 product families, which is fruits, and the other product family is roots. Uh, 2 of these, or most of these products, are highly exportable with a large demand on the United States, Canada, and Europe, and adding up for quite healthy margins for these companies.
Right. And well, one more question on my part as I wait for others possibly to chime in. Who would be your ideal LP? What profile of investor would you like to see?
Well, of course, we are looking for mission alignment first of all. So when I met you guys in Transform Finance, I was truly amazed that Grupo Paisano was not made by you, or I mean, or you guys were behind Grupo Paisano, because it was so perfectly aligned. All the principles of having ownership to reduce poverty, the principles of social justice, and I mean, in general, the transform finance ideals. So for me, I see that this amazing group of people are very generous, and they're thinking of models and ways to really ensure that there is empowerment of the small producer. So I would have to ask that any potential LP has the same goals. The good thing is that it's also profitable, so it helps. The model helps in getting more interest or being more attractive. But I would say the ideal LP has to have perfect mission alignment, or the same vision as Grupo Paisano's senior management.
Great.
Yeah.
And do you have any figures on IRR, hurdle rates, and the like?
Well, yes. The preferred is going to be around 8 to 10%. It's a very common structure on the payback on the how do you say, the escalera de pagos, on the hurdle catch up. It's very regular. We have an estimate return somewhere around 24 to 34%, which is incredibly big. Uh, and but the fund structure on return is going to be really traditional. But we know, and we are really confident that we're going to be doing a hell of a lot better than the preferred. So we estimate that our LPs are going to be incredibly happy with us over the years.
We're right now we're currently under revision of our financial all the financial projections, so we will have them ready very very soon. It could be maybe at the end of this week or next week, and we can send them to anyone who's interested. We do have the projections for each one of the communities and each one of the projects, and there's it's the initial inventory for the two projects that already have inventory and that are already selling, and the other two projects who are just starting, which are more conservative in return and with a higher time to pay back. But with the balance of the two, it is a quite attractive return. So we want to be able to share it with you as soon as we have it.
Well, let's see if there's anything else. Otherwise, I think we're coming up towards the end. We have the information there, and let's see. There's one small housekeeping announcement on our part as we get to the end here. Yes, for the next webinar date will be April 25th. We'll send out an announcement on that soon. And please remember to take a look at the member survey that Carla will be sending very soon.
And if anyone is going to flee, let's meet up.
Yeah, it seems like there will be a good group of us, so we're definitely will be great to continue the conversation. In fact, for those that will be at the flea, Transform Finance will be hosting a little cocktail party on Wednesday night. We're trying to make it as informal as possible at a house we rented in Merida with a few of the other participants. It'll be a pool and mezcal themed party and cachaça if Leonardo has his way. So if you'll be at the flea, please reach out to me, Andrea@transformfinance.org. And we can discuss over drinks. That always makes it a little bit easier.
And if you have any Grupo Paisanos questions, I'll be there.
And I see that Laura put in the Vim little video, and I will also send it out by email to the participants, so that so you'll get a chance to see it.
It is not a professional video. It was taken by our cell phones. It was handmade and artisanal in iMovie.
But Laura put all her heart into it.
Mm-hmm.
Well, thank you so much.
Thank you, guys.
It is an honor to be able to speak with you, and we really admire Transform Finance. Thank you.
Well, thank you. Thank you, everyone, for joining us. And please reach out if you have any questions, and I will put you in touch with Laura and Hector. Thanks for a wonderful presentation. Thanks for taking the time to be with us today.
Thank you, guys.
Bye-bye.
Bye.